What's up, Money Minds, and welcome back to another video edition of Market Briefs. Today is November 11th, and here's some business and financial news you can finally use. Now, traders are predicting that the first federal interest rate hike will happen in July. That is a lot sooner than expected. To kick things off today, I want to know how you feel about inflation. Are you worried about inflation, or is it not really that big of a deal? I want to know if you think inflation is just transitory like the Fed says, or if we shouldn't even care about inflation because all money is fake anyway. Whatever your thoughts are, leave a comment below before you go. In our November 10th market recap, stocks extended their losses on Wednesday, retreating due to the not-so-great inflation report. In addition, the S&P 500 is coming off its first loss in over 8 days. The Dow and Nasdaq also pulled back a bit from their record highs. The hot CPI report pushed investors into inflation hedges and away from stocks and bonds. We'll talk about this a little bit later in this video newsletter. First up in our main story of the day today, we've got to talk about inflation and how it's surging at a 30-year high. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. US consumer prices are surging higher than they have in a very long time. In October, the Consumer Price Index jumped by around 6.2% when compared to a year ago. That is the highest level since December of 1990. And it looks like the 2021 Thanksgiving and holiday season is going to be especially rough financially for families. Energy, rent, food, and vehicle costs led the charge on the Consumer Price Index. And in general, Americans are now spending around 15% more on goods than they did before the pandemic. And many of us are all too familiar with the causes. Persistent supply chain shortages, wage increases, and worker shortages are leading to a blender of problems for most industries. Labor costs are rising to offset the labor and worker shortage, and wages are getting crushed by inflation because of it. Wages are up by around 10% so far this year, but they're only being offset by rising prices. So, how exactly do we fix this? Well, economists still expect inflation to slow even when supply chain bottlenecks are fixed. And as our economy improves, consumers should start spending more on travel, entertainment, and other services, and less on cars, furniture, and appliances. That will hopefully reduce some pressure in some industries. And there are some other negative effects to this inflation issue. Food banks around the nation are struggling to keep up with inflation. Eggs, beef, and milk are all rising in price. And these items are staples for food banks. In addition, fast food prices soared around 7.1% in October. Next up in our mind-blown section, Rivian launched its IPO yesterday and set records. It's now the largest IPO launch in around 7 years. Shares of Rivian jumped by around 26% shortly after it made its big debut. The startup is backed by Amazon, who owns a 17% stake in the company, which is now worth around $20 billion, and Ford, who has a 12% stake in the company, which is now worth around $10 billion. Amazon ordered around 100,000 Rivian vehicles and hopes that they're ready by 2030. The company wants to have 10,000 Rivian Amazon vehicles ready by 2022 and making deliveries. Rivian shares were priced at around $78 on Tuesday night, but by Wednesday afternoon, they were going for around $106. The company's market value is now around $91 billion, which is more than some of the largest automakers in the world, like Ford and GM. Next up in earnings, let's talk all about DoorDash. DoorDash significantly outperformed markets on Tuesday after its earnings call and a new acquisition. But first off, the company actually didn't have the prettiest of reports. DoorDash reported a net loss of around $101 million. That's around $41 million more when compared to the same quarter in 2020. But it did beat expectations on revenue, and it's still adding way more customers than it did back in 2019. And these customers are even spending more. Average customer orders jumped by around 44%. But the biggest news for the platform is that it acquired delivery company Wolt. DoorDash will take over the international delivery company, which has over 4,000 employees and operates within 23 countries. And what's even better is Wolt was valued at around $8.1 billion. That is it for our main stories of the day today, so let's take a quick break to talk about today's sponsor, M1 Finance. With M1 Finance, investing on your terms is as easy as, number one, just pick your pie. This will show M1 Finance exactly how you want your money to be invested. Number two, set up automatic deposits. This way, every single time you get paid, some of that money will go towards your investments. And number three, just sit back and let the market do its thing, all without worrying about commissions. And can't afford to invest in your favorite company? That is no problem with M1 Finance. They let you invest in fractional shares so you can still get a piece of those big pies. So if you want to learn more about M1 Finance and want to start investing with them, I'll leave a link in the description below on exactly how you can do that. Big shout out to M1 Finance for sponsoring this video. And now, back to the news. Workers are beginning to file back into offices a little bit slower than expected. Only around 28% of New York office workers have returned to the office so far, and that number is only expected to jump up to around 49% by January. Office vacancy in New York is at a 30-year high of around 18.6%. And the value of New York real estate has dropped by around $28.6 billion. That is a 16.6% decrease. In addition, it's reduced property taxes by around $1.7 billion. Different job sectors are expecting different return rates from their employees starting in 2022. Real estate, lawyers, and financial service positions are all expected to return to the office sooner rather than later, but accounting, consulting, and tech may end up staying home for a little while longer. Speaking of tech, Apple is the latest big tech company to actively start creating new software tools for small businesses. Apple's new service will launch in the spring of 2022 for a small subscription fee and will give businesses 24/7 support and more iCloud storage. And it'll even help with everything from device setup to employee onboarding. Google, Amazon, and Microsoft all have similar services that are aimed at small businesses. These are typically companies or businesses that have fewer than 500 employees. In the end, these new services cost a little bit of money for a brand new tier of services and convenience. Despite big tech companies swinging it this way, they still aren't doing small businesses a huge favor here. In the end, they're just offering more services and pushing digital subscriptions. Next up in our Pick Your Brain section, Mariah Carey and McDonald's are teaming up to create a brand new celebrity-themed meal. The Mariah menu will only be available through McDonald's app and will offer consumers 12 days of deals in December. Next up is our Money Mind section, where we pull comments directly from you all on our YouTube, Instagram, and TikTok accounts. Today's comment is from Pete B on our YouTube channel, and the comment reads, "I love the guacamole obsession." And that's because extra guac clearly equals extra wealth. So that sort of explains why most of the things we do are guac related in some way. So if you want to talk even more guac and join a growing community of thousands of other money minds, we made a free Guac Talk community Discord, and I'll leave a link in the description below on exactly how you can join. And you can watch Guac Talk over on the main Minority Mindset YouTube channel, and I'll leave a link to our latest video on that in the description below. Last up, Money Minds, here is one final earnings report that came after the bell. For the second quarter in a row, revenue from Disney's parks grew. But the company overall did miss Wall Street expectations, which ended up sending its stock down in after-hours trading. Earnings per share were around 37 cents versus the 51 cents that were expected, and overall revenue came in at around $18.53 billion versus the $18.79 billion that was expected. On the flip side though, Disney's streaming service surpassed 118 million subscribers. It continues to climb with even more new releases and has a goal of reaching around 230 to 260 million by 2024. Though it does expect its streaming numbers to eventually slow down, and its stock was down by around 4% in extended trading yesterday. But that is it for today's business and financial news. Thank you so much for watching. If you liked this video, make sure to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.